Hi everyone. Today let's talk about Trump threatening NATO with increasing tariffs and the potential impacts of what that could mean. That, of course, could be very concerning for the markets. And then, of course, we'll take a look at all of the longer term structures and see what makes sense for the next couple weeks and couple months.
Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started.
In news today, we got Trump coming out and threatening NATO with increasing tariffs to 25% until a Greenland purchase deal is completed. Tariffs will start at 10% on 1 February and then shoot up to 25% for June. So it seems like there is another potential trade war. Going to continue to use this same metric here, the same tools he has been using to try to influence the geopolitical space, which is interesting, right? Are we actually going to take Greenland? I just can't imagine that that is going to happen. Is he going to pull back here and make himself look a little weak? I don't know. Either way, though, effects on the economy, of course, tariffs, not good for markets, not good for the economy. And then if we did hit that 25%, I think that would be pretty dramatic. We've been dealing with tariffs, but this would be on all NATO countries, which is a pretty good amount of our trading partners, basically all of the European Union. So big impacts. You can see 32 members here establishing NATO, but you got Denmark continuing to say that Greenland is not for sale. Moving over to fear and greed, we did finish the week at a 62, up from a 53. So relatively bullish week, despite momentum staying in neutral. You can see strength, extreme greed continues to show really strong movement. Breadth continuing to roll up there. Put call ratio going higher. This is the one that's a little concerning. You don't want put call ratio going higher when you're sitting at all-time highs. Usually that means there is probably something broken underneath and something is going to push markets lower in the not too distant future. And then volatility, it stayed low. It's still below that SMA, not spiking up like this quite yet, but it has been gradually going higher. Safe haven demand, extreme greed, junk bond demand, still extreme greed. And again, this is one of those warning signs really on junk bonds. This has stayed really low. So markets are not too concerned right now. If this starts to roll to the upside, that is usually an early indicator of something potentially coming on the horizon. Moving over to the sentiment survey, look at this number here, 49.5. Almost half of all investors believe markets will be higher in the next 6 months. This is a super high metric. Whenever you are this high, that should be an early indicator that something might be a little too bullish, might be a little too frothy here. You can see this is the 1-year high for the bullish indicator, absolutely massive. And just keep in mind that is usually not the best time to be investing for the long term. There will usually be cheaper prices in the not too distant future. Moving over to seasonality, you can see seasonal period in here, sideways choppy price action during current price. And then as we head into next week, 20th, 21st, 22nd, this is typically a pretty bearish period, pretty violent, honestly. Can go from about flat up a quarter or so and then all the way down to -2 on average, which means if we actually do get price action that follows this direction, you'll probably see a more violent move, especially because we have kind of rallied during this period of down to sideways choppy, and now we're going into that kind of more bearish period for midterm years. Moving over to the seasonal calendar, of course, we're closed for the Monday, and then you can see bullish Wednesday, bullish Thursday, January ending the best 3-month span for markets, and then you can see January barometer 84% correct, and then we'll see what those official results are. They publish them for Almanac Trader on the 30th, which so far I think it's been pretty bullish, which means the next rest of the year is supposed to be relatively bullish. And then in terms of data, semiconductor billings on Tuesday, definitely curious about that. And then housing starts, consumer data for Michigan, not a whole lot really this week. The following week is a much heavier week in terms of economic data. Moving over to the earnings calendar, ton of really big earnings this week, kicking off with Netflix on Tuesday, 3M, US Bank Corp, United Airlines, all on the Tuesday. For Wednesday, you got J&J, Charles Schwab, Halliburton. Want to see what they're saying after all of the Venezuela stuff. I think will be interesting. Thursday, we get Intel in that semi space. Couple of airlines, Southwest Airlines there as well, Alaska Airlines, and then basically nothing on the Friday. And then moving over to the economic calendar, basically nothing here for Monday. A little bit of CPI data for the Eurozone, definitely interesting. They have been at a really low level. They were a little more successful on inflation. We continue to inflate our currency, honestly by design, I would guess, in order to try to pay off some of that national debt, which we just don't seem to care about on the political side, which is, of course, super frustrating. And then you can see For Wednesday, Atlanta Fed GDP continues to be super bullish for Q4. Want to see what that looks like. On the actual results, we get Q3 GDP on the Thursday, and then PCE price index core PCE numbers here for the 22nd, and then 10-year tips still very low levels. As long as that stays low, we should be in good shape. And then for the Friday, like I said, just Michigan University data, 1-year inflation, 5-year inflation expectations. This still seems super high to me. If we get anywhere near 4.1% for 1-year inflation, that's going to be pretty awful. And then consumer sentiment, want to see that stay pretty strong, and that'll round out the week. Moving over to Max Payne for the end of the week, you can see Max Payne pretty much right at current price. So not expecting a ton of movement. Over the next week, put-call ratio pretty high there at 3.5. Again, indicating there's probably a little bit of bullishness. You can see puts really high at 680, 683, and 690. And then the calls don't really come in until 695. So anywhere between kind of 683 to 695 makes sense, which I guess doesn't give you a ton of upside potential. Maybe we do push into that just because there's so many puts over here. And then just keep in mind there are some massive put strikes out here at 550 and 600. No expectations of getting anywhere near those price actions over the next week. Moving over to the SPX charts here on the weekly chart, really no changes, continues to show slow grinding price action, still very much bullish on that weekly chart. You can see the momentum is bearish, but the price action still well above that 8 EMA at 68.53 continues to show bullishness. Still looks like a rising wedge on the short time frames, but none of that has come to culmination yet. And you can see a little bit of volume over the last 2 weeks. Interesting, like to see that on the up week. Inside candle following is not super great. You can see inside candle here, pulled back a little bit, and then rallied up, continuation off of that, which is that kind of rising wedge that we've been seeing. But overall, of course, this is still very much an uptrend. We haven't seen any structures break quite yet. It has been a long time since we've seen a bit of a pullback. You can see this is all the way back to April, nearly a year without any reasonable size pullbacks. So expecting to see something over the next couple of weeks, maybe couple of months, where we get a more reasonable size pullback, maybe back down to these areas here around 6,100. That would be interesting. If we did see a pullback of that size, that would only be about 11 to 12%, which of course would kind of jostle markets, but I do think that would give buyers an opportunity. I know there's definitely money sitting on the sidelines here waiting for this to kind of culminate. You can see just looking at it here, the momentum has obviously faded, right? We have strong momentum, very consistent up moves up until about here in November. A little bit of pullbacks, and we are not too much higher than that high back here from that 27 October week. So if you look at this as kind of sideways choppy here, that momentum is clearly fading. Going to start to see this kind of stop and roll over the next kind of February, March timeframe, I think makes sense. So just keep that in mind. This is slowly fading, and it wouldn't shock me even if we did say that the top was already in. We didn't see anything dramatic yet where you get like a very clear blow off top, but this is starting to flatten, and it's been flattening for a couple of weeks. Moving over to that daily chart, that rising wedge pattern that we've been watching, you can see clear highs marked by this consolidation point, clear lows marked by this trend structure here, and we're pretty tight in there. This is going to culminate somewhere around the end of January time period. Do we get that blow off top? Somewhere in here towards that end of January. I think we'll probably get that here pretty soon. I would expect that to fail, and then we'll get that bigger breakdown. But for now, we're still in this rising wedge pattern. Moving over to those tasty charts here, you can see we're still above that 8 EMA, continues to be support in that 685.21 area. Came into that zone a couple of times over the past few weeks, and every time we get there, we do find support until that structure breaks at all. Then we are going to stay in bullish conditions. You can see 21 EMA was support back here in November, touched that briefly and then rallied back up. Trailing stop right now, 646.21 on the weekly chart right in here. This kind of consolidation area here, just below this low here, makes sense. A little bit of volume on the week. Overall, not too bad. The volume weighted MACD is a little bit more bearish. As this slowly starts to fade, you can see that momentum changing, hit the upper bands, hit the second band, didn't even hit the second band on this most recent rally, slowly fading here, and then this will start to roll again over those next couple of weeks, maybe a couple of months. And then looking at that daily chart, you can see this is still bullish conditions. We did get back above that trailing stop around 692, dipped below it on the close of the week, but it's still sitting at the 8 EMA, still bullish conditions. 677.69 is your current trailing stop. Either way though, if you're kind of trading this as a neutral price action, I think that's probably the best way to go for now. Moving over to the NASDAQ, same kind of thesis here, except for the fact that we're not actually at all-time highs, right? The high is still back here in that same October-November time period, up around 26,100, and we're currently at 25,500, so we're still a pretty decent ways off of the high, about 2 to 3% or so over the past couple of weeks. 8 EMA continues to be, 9 EMA continues to be support, and they're around 25,339. Momentum still bearish, RSI still bearish, still expecting this to eventually roll to the downside. Of course, timing is always the challenge. Do we get that kind of final suck in of liquidity where we tag this area, overthrow it, fake that breakout, and then we get the bigger sell-off, potentially back down into this kind of zone here? Maybe that 55 EMA on the weekly, 22,700 is of course in play as that 55 EMA in that kind of 11% down range. And then you got this trend structure a little bit lower, around 21,675. Momentum bearish, RSI still bearish, so this is faded in the momentum. Again, you can see how that's been playing out. Really powerful move here, very consistent uptrend up through November, and then sideways choppy through that time period. We got into this price action end of October, and we are still here now as we get towards the end of January. And then looking at that wedge pattern we've been watching here, you can see we're currently above it, so that's bullish, right? As long as this structure holds here, we should look for the next leg up, certainly possible. Would have liked to see us stay above 624.90 on a closing basis. We did it a couple of times and then we could not do it again. So 624.90, very important level. It's still holding support here. You got this downtrend in here, you can see, and then the uptrend here, marking that kind of pivot point. If we hold this zone and rally up early next week, then we should look for that bigger continuation and then a sweep of the all-time highs. If this structure breaks down, then of course we're looking for 595.50 and that 144 EMA in that same area. Moving over to the Tasty charts here, you can see on that weekly chart, same kind of setup, hit that upper band, pulled back, missed the second band, pulled back, nowhere near it here, so fading momentum. 8 EMA continues to hold support, 618.09, tagged that area multiple times over the past couple of weeks and continued to hold above it, so that is relatively bullish. Your trailing stop still very much lower, all the way down at 569.32. And then looking at that daily chart, you can see still bearish conditions, still at 632.81, just barely below this most recent high here, the all-time high from October, and we're still sitting basically in the middle of this range. Could go either way. Do like that the upper bands and the lower bands are moving to the upside just a little bit. That is usually an indicator that there is at least a little bit of bullishness to come, and I still expect kind of a sweep, some kind of liquidity sweep of these upper levels before we see that bigger breakdown. Moving over to the Russell. Russell has been very strong over the past 2 weeks, up 4.6 and then 2.13%. That usually makes sense. Strong push at least half of the following week makes sense, and then we are still looking for this potential overhead trend here around 270, 271 area. You can see this is a very long-term trend line here. Marks the top back here, and then marks the top back here in July of 2007. So that's a very long-term trend line. I suspect that we will get a tag of that level before we see this structurally change. So still super bullish. And then looking at that daily chart, you can see kind of a hesitation candle at the end of the session, a little bit overbought here. Maybe we get just a slight pullback, bigger push to that level, maybe just pull back in time, touch the level, and then see what happens after that. But it's been a decent run. You can see rally, kind of bull flaggy rally, expecting just a little bit more rally to that zone, and then we'll probably see a bigger pullback. Moving over to the Tasty charts here, again, you can see we pushed the upper band, pulled back a little bit. Looks like we're pushing towards that upper band. Ultimately, that's going to take you into that kind of 269.69 area, 270 area, the same area as that trend structure that we've been watching. So looking for that in here. as we trend up over the next week to 2 weeks. The only consideration that is concerning, of course, is that we are very, very extended on the daily chart. Upper band right now is 264.52 or so. 265.74 is current price. So we're clearly above this. Might need to see a little bit of a pullback in time. Still very much bullish conditions. 254.55 is that trailing stop, which is pretty much right at this previous high. Maybe we pull back to here, tag that area, and then get that push to that kind of final top in the short term. Moving over to the Dow here, you can see we are still on this grinding price action, still very much on this bullish structure, slowly going higher. From week to week, we were down just a little bit this week, probably going to see a little bit more of an up week the following week. Momentum still bullish RSI, nearly overbought, but not quite there. Overall, still very much bullish structure. Moving over to the equal weights, you can see equal weights continue to be really, really strong, very similar to the Russell charts. 2.4% up, followed by a little bit less than half. Not as strong here on the equal weights, but momentum still bullish, RSI still bullish. Still looking for this longer term uptrend, trend line at 205 in play. Maybe we miss it. We're very close to overbought conditions already. Either way though, you can see the breakout kind of retest here. Never closed back below it. Continuation higher, broke out all-time highs, price discovery for the equal weights. Breadth has been improving, which means all of these other non-tech stocks are doing well. Moving over to the SPY, Russell, and NASDAQ SPY, you can see the Russell continues to do super well, went right to that next level, 259. We're right on top of it here. Is this the zone where we start to see at least a little bit of a bounce? Potentially. Of course, the NASDAQ is not leading either, so tech has been hovering and everything else has been generating those gains. So this will probably continue to go. I would say that 200 probably is the next zone in here, around 2.48. So the Russell should continue to outperform, whether we have some oscillations in there or not. Of course, is the bigger question. You can see this is a downtrend. We're kind of on that downtrend line at this point. And honestly, it looks like we're kind of below it. Really can't manipulate that too much lower. Right to this low here on July marks this consolidation low before the bounce, and we're pretty clearly below that. So overall, this is accelerating. Momentum bearish, RSI bearish, meaning Russell outperformance. And then honestly, this has held up really well on the NASDAQ SPY chart. You can see this consolidation area here. It's below those short-term EMAs, which means it should break down to that 55, down around 3.62 area. Momentum bearish, RSI bearish, but so far it's held up really well at that 3.66 level. So my guess is that this will continue to consolidate into earnings, and then earnings will probably be the catalyst that either holds this level and projects us to new highs, or it's going to cut through this area and probably go quite a bit lower down to the 3.55 area or that 144 EMA 3.53 potentially in play. But either way, still looks a little bit bearish sitting on support. Moving over to SPY divided by the M2 money supply, you can see this still has not taken out that high from that October chart. So you have clean divergence still on the SPY versus the SPY divided by M2 ratio. You can see, like we talked about on the previous charts, the SPY continues to go higher, continues to be well above these highs here, but this ratio is not improving. This is continuing to sit. It looks a little bit more like the NASDAQ. It is still above the level 3014, and I still think this may go up to that 3271 level. That is the all-time high for this ratio going back to the dot-com bubble. It's not impossible that we tag that, but once we do, eventually this is going to come crashing down, and I do believe there is a deeper pullback to come, something more substantial, maybe 25-30%, more like a bear market potentially. But of course, nothing has told us any of that quite yet. This is just unsustainable levels, and we've been saying that for years at this point. Moving over to the Mag 7, the Mag 7 has been a major driver of growth, of course, as we've been watching it. You can see very powerful move here from the lows in kind of March, April time period up until the highs back here in October. And since then, the Mag 7 has not gone higher, and you can see it was actually down 2.67%. And of course, we'll take a look at all of these, but this has been very bearish. And now we're looking at that 357.91 is that support area. I think this is probably going to pull back to the trend structure here once this breaks. Momentum bearish, RSI bearish. And once the Mag 7 starts to go, eventually that will start to carry markets with it, just because of the amount of market cap of the S&Ps and the NASDAQ encompassed by these 7 stocks. Moving over to Apple and Microsoft. Apple down 1.48%. You can see previous week 4.3%, absolutely massive weeks here, cutting through that 21 EMA, headed towards the 55. You got some consolidation tops in here to consider, but that 55 is all the way down at 233.48, so there's a lot of room there. Momentum bearish, RSI bearish, volume ramping on the sell. Same here on Microsoft, big down week for them as well, 4.05%, clean through that 55 EMA already, and now we are through this previous high here. So The next consolidation top, I'd be looking down around 440, and then you can see next dynamic support is all the way down around 413. The biggest stocks, the market leaders, are already starting to go a little bit lower, but because market breadth has been improving, the rest of stocks have held up okay, but eventually these will start to carry markets lower. Moving over to Tesla and NVIDIA, you can see Tesla is down on the week 1.68%, but we are still watching this trend structure here, this 21 EMA in there as well at 426.96 with this low, higher low here, and this high, higher high here. Looking for this structurally to bounce. We took a trade on this. We're watching it closely. On Tesla, I'm really hoping this trend structure is going to hold. The momentum on the weekly chart, not super great. But either way, like this in here, need it to get back above 450. If it can, I think we can get at least back to this high would be interesting, closer to that 500 area. If it cuts through here, of course, then we're probably headed back down to 384 potentially. In the short time frames, this does look a little bit more bullish, but on the weekly chart, not super great. And then looking at NVIDIA here, you can see on the weekly chart, up 0.74%, hit this main area of support around 180 to 184, and now we're going to see if this can go up a little bit more from there. Is this zone going to continue to hold? It did bounce there once again, but it did go lower first, right? So you could say that's bullish. Good volume, good announcement from TSMC on their earnings. We'll see how the semiconductor billings and the rest of the earnings come in, but so far this is held with a potential for a low, higher low in here and a bullish week. So looking for a continuation potential back up to 192, 193 area. Moving over to Meta and Alphabet. Meta was down 5%, very, very bearish there. Continues to go lower here. Momentum bearish, RSI bearish, rejecting off this structure here, looking for 564.50 as a potential zone of support. And then you can see Alphabet breaking out the previous week, continuing to go higher this week, just barely, but continues to show super bullish structure. Obviously parabolic. Eventually this will pull back at least a little bit, but for now it continues to look very, very strong. In terms of support levels, 322.09 is still your support. Moving over to Amazon and Broadcom here, you can see Amazon was bearish on the week, 3.34% after being up a lot, 9% the previous week. Pulled back just a little. Want to see this honestly pull back a little more, tag the level and then rally off of the level would be super bullish. Get one of those kind of breakout round trip continuation moves. Like to see those. And then looking at Broadcom here, you can see it was up 1.95%. Again, getting that good news from TSMC. Momentum stepping to bullish. The RSI is still bearish here. If we can get above the trend, then maybe you can look for a push to that next trend up around 428 area would be interesting. But for now, this looks like a breakdown kind of retest. Potential for a breakdown back to 321.70. And then if that structure breaks, and dynamic support is all the way down here at 277.74. Moving over to staples and discretionaries, you can see staples had an absolutely colossal week, 3.65%, one of the biggest weeks we've seen on staples for a long time. Huge volume over the past couple weeks as well. You can see previous week 3.65, next 2.01, following that 3.6 weeks. So continuing to go super, super powerfully. Suspect this will go back to these highs here up around 84.50 or so, back into this area, and then we'll see what happens after that. But very, very strong. Again, is this based on the rumor that maybe tariffs are getting refunded? That would be interesting. Maybe they're going to get removed. Plus refunds could be very, very good for these kind of stocks. And then looking at discretionaries, you can see down on the week, 1.7%. Support is still 121.39. You can see this is still clearly a bullish structure with low, higher, low, high, higher, high, looking for a higher low setup and a potential push to these upper trends around 128, 129 area. Moving over to Breadth, 20-day Breadth did basically flatline, still in the same consolidation, very little movement there. Then looking at 50-day here, positive on the week, continues to show this bullish consolidation here, breakout continuation here, momentum bullish, RSI bullish, looking for this to get at least to this top area around 82-ish before we see a change in structure. Moving over to 200-day Breadth, also showing this base here, consolidation, breakout here, right back to these highs from August of last year. Looks like we're going to continue through that area, continues to show bullish structure. The Breadth has really been the one that has said markets are bullish here and that we should continue to see bullishness. Breadth has continued to improve across all metrics, and that is no exception this week. Moving over to the dollar here, you can see the dollar continues to go bullish. It still kind of looks like an overall bear flag to me with this breakdown flag set up here, but in the short term continues to show bullishness, momentum bullish, RSI bullish, looking for this upper trend structure around 100.7. It's 3 weeks of bullishness in a row. Do we get a hesitation week before continuation? It's kind of hard to say, but Either way, came down, tagged the 21 on the weekly, continued to close bullish, looking for 99.83 in the very short term, and then that trend, like I mentioned, 55 EMA also there at 100.7 as well, and then the next level would be 101.25. So overall, bearish, medium term, short term bullish. Moving over to bonds. Bonds continue to look really good, as we mentioned. Super bullish breakout zone here, 97.69 is that zone. And then looking at TLT, still in this consolidation base, tried to go higher and then rejected. I still think that we will get the continuation out of here. Momentum stepping to bullish. RSI needs to get through the SMA here, but good volume. Still think that we are going to see this go higher in the short term. Moving over to the VIX, you can see the VIX was pretty bullish here, up 9.6%. You've been watching this kind of ramp here. Is this the short term kind of top? I don't really believe that's true. Momentum stepping to bullish. RSI continues to step to bullish here. I think we're going to see just a little bit more on it. The question, of course, is how much more and how long does that take? I would suspect that we'll get at least a little bit more up into this kind of 20 area before this is all said and done, and then we'll see what happens after that. Moving over to my accounts, like I said, I took a position on Tesla here. I bought around 445 because I thought we were going to get that potential push and that we might not come back down into the zone, and sure enough, we did come back down into that area. But we did hold the support into the close, so we're going to continue to sit on this and see what it looks like in the Monday, Tuesday next week. In terms of trades here, you can see I have a stop in at 431 and a potential take up around kind of 472 area just before that most recent top. Let me know down in the comment section what you think of the Greenland potential trade, potential buyout, potential tariffs. Is it going to work? Is it all nonsense? Let me know what you think down in the comments. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.